The US Federal Reserve Chairman Jerome Powell, he said in a press conference yesterday, he was asked whether he believed that there was a risk to financial stability in trends such as the meme-inspired cryptocurrency Dogecoin. And this is what he said.
Financial stability for us is really, we have a broad framework, so we don't just jump from one thing to another. I know many people just look at asset prices and they look at some of the things that are going on in the equity markets, which I think do reflect froth in the equity markets. But really, we try to stick to a framework for financial stability so we can talk about it the same way each time, and so we can be held accountable for it. So one of the areas is asset prices, and I would say some of the asset prices are high. You are seeing things in the capital markets that are a bit frothy. That's a fact. I won't say it has nothing to do with monetary policy, but it has a tremendous amount to do with vaccination and reopening of the economy. That's really what has been moving markets a lot in the last few months, is this turn away from what was a pretty dark winter to now a much faster vaccination process and a faster reopening.
So a few things to unpack there. First of all, mentioning that, yes, asset prices are high. And he mentioned the F word, froth. It's not a good word for the Federal Reserve Chair to be mentioning, and stocks plummeted immediately after that. People have been suspecting that there's going to be huge inflation coming. You're just seeing, craziness happening with the supply chain. It's going to push prices up even higher as well. I think hold on to your belts, everyone. But I'm going to throw this to you, Will. What are your thoughts on his comments and what's happening in the economy and Dogecoin, all of that?
So I have a question really quick for you, and then I'll jump back into it. But did the initial question that spurred that comment from him come about from Doge itself, or was he just commenting on the markets itself?
It came about from Doge. So he was asked whether there was risk to financial stability in trends such as Dogecoin. Is Dogecoin going to upend the economy? And it was also in reference to GameStop as well.
Okay. That's great. I didn't see the initial question that led to his comment there, but to have an acting Federal Reserve chairman comment on the frothiness in the markets because of a meme coin, and then the meme revolution on Reddit we saw in January, I think that is the best picture that we can get of the new economy that we're moving into, and also what a scary situation we are in right now. The fact that we have market frothiness exemplified by this meme coin that everyone thought has been dead for years and was resurrected because of Twitter and Reddit and memes. That's incredible in itself. I think that's a turning point for myself. I will claim that as a turning point to have a acting chairman reserve head comment on Dogecoin. I don't like all the other Dogecoin stories, and so I think that should give me some credibility there. But overall, yeah, markets are really frothy. I don't think that has changed. That's been known for quite a while. It's interesting that the Fed is commenting on that directly. They're typically very conservative when they're commenting on any sort of securities or stock valuations, just because anything he says at that quasi pulpit, you see almost immediately in the markets the next day. So that's interesting that he's addressing that right off the bat. And maybe it portends to the future. They're worried about how their monetary policy over the last year has impacted and will impact the future of the U.S. securities market.
Yeah, no, I think in the internet age, anything could happen. I love that point about this is kind of the best representation of this economy, because it's kind of people taking things into their own hands, and maybe this semblance of the Federal Reserve doesn't quite have the same control that people have thought they've had all this time. My head just got a whole lot clearer just then. Sorry, anyone watching, I was hearing a bit of an echo and that just disappeared. You're absolutely right. That Dogecoin kind of shows it's the money of the people as people present it, and GameStop was a movement all about the democratization of stock participation, all of that. So it is interesting that these questions are being put to the Fed chair. But Jen, you had your hand up. I'll throw to you.
Yeah. So the story that we covered, I think in February, just popped into my head. When we're talking about FOMO and people taking out, loans to get involved in stocks and things like Dogecoin, because we're talking about them on social media and people think that they're going to just get rich really quickly. we've seen some people do this with Doge. They're talking about it on Twitter. They're on Reddit. They're just kind of pumping their money into it to try and get rich quick. What should those people take away from this story?
I'm going to throw that to you, Will.
No, I think it's terrifying. I was listening to a podcast of some top crypto traders earlier today, Suzu from Three Arrows and a few other guys, and they're talking about market frothiness right now. And they just kind of noted that even in hedge fund land, a lot of people have realized they have missed the greatest bull market of cryptocurrencies ever, and they don't know what to do. And so they're just scrolling through CoinMarketCap looking for the next big thing because they have no idea what's going to happen, but they know they need their portfolio to pop 3x to compete with everyone else who did that. And I think you can take the same principles and apply it to the retail market. People see all the money, they've seen their friends make money, and they want to do the same thing. And now it's happening in Doge markets. And I mean, that's the kind of the lesson I think I can pull away from this. If the hedge funds are doing it, then also retail is going to be trying to mimic that. And the lesson I think, like the thing to walk away from this is like, you don't want to be catching knives on the way down. You don't want to be catching red candles because then your finger's going to get chopped off. So I would say stay away. That's not investment advice, but also it is just not a great market to enter into, in my lowly opinion.
Yeah, it's I mean, I think it's sad that so many people are being forced to become day traders, are being forced to enter these markets as a way of safeguarding their wealth because, you know, the economy's not looking good. And if you just look as a general overview of what's going on right now, it's just so expensive to buy houses, to buy groceries, to live, you know, compared to what it was like a decade ago or in our parents' era or any of that. And these days, you know, young people are struggling. They're looking for ways, like we call it get rich quick, but, you know, like they're just not getting the same wages that they used to compared to the value that their dollar actually gets them because the value of the dollar just goes down so drastically. So, you know, it's interesting that they are kind of turning to these other mechanisms for safeguarding money or making money.